Welcome back. In this video we're going to walk through one of the most powerful tools in Arrow Algo, the optimization tool. This is where you take a strategy that might be inconsistent, noisy, or even losing money and turn it into something much stronger by letting the platform automatically test hundreds of variations for you. It's one of the most valuable parts when building algorithmic strategies because optimization takes away the guesswork and lets data tell you what actually works. To show you how this works in practice, we're going to walk through a real example step by step. So let's begin with a starting point. Here's the base strategy. I'm trading Solana against USDT. I'm trading 10% of the value of the account per trade with 20 times leverage. The entry logic is simple. I'm checking the 4-hour MACD is above the signal line, so I know that we're in a broad uptrend. Then I'm using the 5-minute RSI to look for a short-term oversold dip below 40. And finally, I'm adding a quick volume confirmation by checking that the 5-minute 3-candle moving average is above the 10-candle moving average. For exits, I simply reverse the logic. If the 4-hour MACD turns bearish, I exit. Or if the 5-minute RSI pushes above 60, I take profit. When I run this backtest, the results look okay at first glance. There's a 66% win rate and plenty of activity. Average wins are around 15%, but average losses are almost 25%. But when I open the trade list, I can see a real problem. There are a few full liquidations, 100% losses, and that's because we're using 20 times leverage. It only takes a small move against us to cause a complete loss, and the overall return is minus 13% over 6 months. That's far too volatile to trade live. So the first place to look is risk management. Instead of waiting for a full liquidation, I can add a hard stop loss using the 5-minute last signal profit block. The question is, where should we place this stop loss? Should it be at 50% loss, 60%, 70%? Instead of manually changing the rule over and over and running each individual test, this is where the optimization tool can come in. It lets us test every variation automatically. So if I open the backtest window, I can go into the advanced options and click on Optimize Scenario Parameters. Then when we're ready, we can scroll down and choose the parameters. We'll be shown the block builder, where we can find the block that we want to optimize, right click on it, and select the parameter that we're testing. So I'm picking the fixed number block that's in the stop loss rule, and I'm setting a maximum value, a minimum value, and the increments in between. So I'm going to test minus 50 to minus 70 in steps of 5. Arrow Algo will then run 5 backtests automatically, each one of them with a different stop loss level. The backtests will start 10 seconds apart, and it's important not to leave this screen until they're all generated. So when the results come in, something really interesting shows up. Overall the returns vary, but the largest loss drops from 100% loss or full liquidation to a largest loss in the 70 to 80% range, and the average loss improves in every single version. Here we can see when the value was at minus 70%, we cut out the liquidations, but the overall win rate for the strategy stays the highest. So for now, I'm going to keep that one. We've dramatically cut the volatility without having to change any of the entry rules. Now that the stop loss has improved, the next thing to optimize is the RSI signals. Using RSI under 40 for entries and above 60 for exits is producing a lot of trades, and it's probably a bit too noisy. So again, instead of guessing where the best threshold might be and running lots of manual variations of tests, let's automate this by having the optimizer tool do everything for me. If I open up the backtest window again, configure the optimization, right click on the fixed number blocks in the RSI rules, and then for the open rule, let's set values between 25 and 40 in steps of 5. And then in the sell rule, let's test between 60 and 80, again in steps of 5s. That's going to create 25 different combinations of tests with one click. On the free version of the software, you can perform up to 10 tests per optimization, or you can upgrade for higher limits. We're looking at every 5-minute candle over a 6-month period. That's over 52,000 candles, and because we're running 25 variations at once, the platform's analyzing more than 1 million candles with one click. That's pretty impressive. When everything finishes, the final pattern is clear. Exiting at the lower RSI levels like 60 to 65 performed poorly because we cut the trades too early. Exiting at the higher levels allowed profitable trades to run a bit longer, which is useful when we've got leverage in there. On the entry side, setting the RSI too low reduces the win rate, but an RSI around 30 strikes a nice balance. In this case, the combination of RSI under 30 for entries and over 75 for exits produces the strongest version, returning around 197% over 6 months while keeping the strategy stable. And this is really the point of optimization. It's about discovering how your strategy behaves under different conditions and identifying the versions that are going to stay stable when the market changes. That's the difference between something that just looks good on a chart and something that actually holds up in real market conditions. Once you've identified a strong rule set, you can refine it further, combine it with more advanced logic, or move on to risk management improvements like dynamic position sizing or trailing stops. Optimization gives you the foundation to build on. In the next tutorial, we're going to take everything we've learned here and apply it to leverage, margin, and risk management. I'll show you how combining these concepts with optimization can dramatically improve return and stability. See you in the next one.